Time for a live session with the final hour. My name is Chris Pulver. Here we go. 3 o'clock Eastern Time, September 17th, one day before the Fed. Tomorrow at this time, we'll probably be dealing with some chaotic price action. So let's chat about it. I will bring up the chat here. If you're tuning in from YouTube, type in a YT in the chat. If you're tuning in from Facebook, Twitter, type in those respective platforms. X for Twitter, FB for Facebook, or Meta, whatever. But it's still Facebook. All right, let's jump into the charts. I just put on a trade here. This is Walmart. I was trying to get a couple of fills on Walmart, and price just kept running higher. So no assignments, no anything. I put on a fresh trade. I'm going to get that added into my signals here. I'm looking at a ratio spread. So let me put in Walmart here, 75. By 73.33 ratio spread for $1.10 credit, willing to own. And the shares would be assigned, if assigned, price would have to come back below 73.33. Do the math really quickly. 75.33 minus, I'm sorry, 75 minus 73.33 is $1.67 minus $1.10 is 277 minus the assignment price. I'd be looking at ownership around 70.56. Okay, we have fair market value at 86. All right, see how that looks. Okay, a little activity there on Walmart. All righty, let's take a look at the markets right now. We're sitting down on the SPX for the day. Open a little bit higher with a gap, probably lifted by retail sales. Also, futures had a big pop last night with Microsoft announcing a raised dividend, an aggressive stock buyback program. I think they bought back like 60 billion in shares, raised the dividend from like 60 cents to 80 cents or something along those lines. Could be a few cents off. But the NASDAQ was higher right at 6 p.m. when the futures market reopened for the new day. Retail sales was positive this morning going into opening bell. So SPX is up, faded through the morning to essentially be a zero-sum day as we come into FOMC tomorrow. So here is the SPX. Here is the SPY. Same type of thing. So gap higher, settles back in. Right between, looking for tomorrow's price action. Let's go to the QQQ and the NDX. See the similarities. So gapping higher, fading, came right back to yesterday's close. Go to NDX. Gap higher, fades back right to the close. A little bit choppier, a little bit more volatile on NDX. So we are sitting right at the highs. This chart alarm at the all-time highs didn't quite get activated on SPX today, but you can see they're very, very close. In fact, our July 16th high was 56.69, and today's high was 56.70.81. So we did actually poke above those highs with the wick. You can see we retreated off that, and that is where we stand with the Fed coming in tomorrow afternoon. Will the market continue its push lower? Is this putting in a bit of a top today? We're going to find out based on tomorrow's price action. The watch tool, let me refresh this. Probabilities are still suggesting that the Fed is going to be cutting by 50 basis points tomorrow, 63% probability. According to the outlook, a 50 basis points cut is the highest probability for tomorrow. Then there is a gap until November. That is expecting a 25 basis points cut for November, and then a 50 basis points cut for December. So we'll obviously see how it all shakes out, but 50 and 25 and 50 adds up to 125 basis points in cuts before we get through the end of the year. tomorrow's language with Jerome Powell and the statement and everything with the press conference is going to be really interesting. I don't necessarily think I want to listen to what he says. I mean, I usually do, but I'm not necessarily going to trade his words. I want to trade price action. But I am interested to see, like, how are they justifying the 50 basis points cut in lieu of, having, maybe the absence of an FOMC in October. Any type of Q&A that pops up around, potential rate decision right after the election. That's another thing that I was a little skeptical of going into this year was, when there was no rate cut expected for September, I was wondering, okay, are they going to cut, November right after the election? November 7th is 2 days after the election. And of course, we just have to consider, like, where price is going to go. So a couple of trades that I have going on right now. I'm essentially, I'm like taking some pretty inexpensive hedges just to protect. Look, I think everybody would benefit from all-time highs. If the market's going to continue to rip and the Fed, kind of talks it up tomorrow and says everything looks good, they have zero control over employment news. And the reality is from September 18th until, in fact, let's go to the calendar right now. Let's go to a calendar here, and I'll go high impact only. And so as we come into tomorrow, here is, and they officially updated this. The Forex Factory calendar still shows a 5.25%, which is only 25 basis points cut. And I had a Bloomberg calendar yesterday, and that was showing a 5.25 cut. Let me see what this says for tomorrow. So here's Tuesday. Here is Wednesday. Let's go to the 2 p.m. So the Bloomberg economic calendar still only shows a 25 basis points cut, and yet the Fed watch tool is showing 50 basis points. So we will see. I mean, the market obviously got excited to test all-time highs today. The NASDAQ, here's the NQ futures feed. We're just shy of this previous high that we saw back at the end of August. Let's go to QQQ. Okay, this rip up here towards the end of August. This actually was an interesting top. So August 30th on the S&P was right back up towards the highs, and we had another, gouge to the side with the Labor Day holiday, and then opening Tuesday through Friday with two of four very directional days, and then we came right back up to the highs again. So if we're struggling at the highs, it would make some sense to me that this resistance is pretty firm. We obviously have some levels the market can go back to. Things get really nasty to the downside, then we're talking, September, what was that low there? We're talking lows September 6th, and we're talking lows August 5th. Until then, let's see what happens. Is the market capable of making a higher low and then another push to the upside, and then we justify more highs? It's very possible, right? Could have a lot of chop coming into tomorrow's FOMC. If the market turns lower, there's room for the bears to get down to these levels. There's an interesting divergence happening between, the SPY and the Qs. I mean, we're right back up towards the all-time highs in the S&P. We are still quite a ways off the highs on the Qs, but a 6.5% move to the upside to get to all-time highs on the NASDAQ is a pretty interesting play for tech, semiconductors, and everything else. But I think the big beneficiary, if we do have a 50 basis points cut with a more aggressive cut cycle by the end of the year, I do wonder, and it's not a guarantee, but I do wonder if the Russell actually hangs in there and outperforms. So today, S&P is flat. We're down 0.15% on the day. The Qs are down 0.11%. The Dow's down 0.18. The Russell's hanging in there positive on the day at 0.74, just because we had a more aggressive gap to the upside, and we have more rate cuts coming, tomorrow. At least 25 basis points, if not 50. I think the big surprise would be a 0.75% rate cut, or obviously zero would be the big surprise. But I think 0.75 would be the overshoot. I think 0.5 right now. I didn't believe it, a week or two ago. But my opinion has been swayed where I looked at the gap between news, and with the FOMC on Wednesday. All right. And then we have FOMC on Wednesday. We have Bank of England on Thursday. Thursday night, we have Bank of Japan. So we still have three central banks to get through. And then we have some CAD sales on Friday. Now we go into the final week of trading Let me see what we have for U.S. news. We have PMI numbers. We have an RBA rate decision. We have the Swiss National Bank before the end of the month. We have unemployment claims and final GDP for the quarter. What have we had the last couple of prints? 1.4%, 3.4, 4.9. Obviously, I'm curious, again, like, is the U.S. data going to be pretty solid? We get to October, then we're going to start kicking off with early earnings season. The big financials will step up first. We're going to have more PMI numbers, JOLTS job openings, ADP precursor, non-farm payroll on Friday the 4th. So it's only a couple weeks away to get into earnings season, and employment data comes first, right? Employment data comes first. Then we're going to have more inflation. And again, in the month of October, all we're going to see from the Fed is likely FOMC minutes. Nothing with the press conference, probably no surprise statements or anything like that outside of FOMC minutes. And the employment news is going to be relatively sensitive. So, if we have non-farm on October 4th, and there's an opportunity for non-farm to then beat expectations, we might actually show that, we've had a bit of a downtrend in employment, but if we start to pivot and go back higher with some higher numbers, I mean, maybe the forecast is a little light at 125, 130, comes in 140, 150, showing that employment's trending in the right direction. Unemployment claims, if they stay steady, here we go to unemployment claims. And by historical standards, we are still somewhat quiet. Let me see if I can go out a little bit farther here. Let's go. Let's see if we can go years and go back like 15 years. Come on. All right. Trying to go back to get a much bigger picture move. We do have Thursday unemployment claims this week, I believe. But anyway, let me go back to the charts and just kind of type up a little summary. So 0.5% expected for rate cut. Now, it's odd to see that multiple economic calendars show 0.25%. So that's obviously going to be, more than expected, more than forecast. But we see it on the CME Watch tool. The futures market's pricing in 50 basis points. This leaves a large kind of data gap for U.S. news through November 7th, which is the next FOMC. So what this potentially allows the Fed to do is this, if they cut 50 basis points, if the Fed cuts 50 basis points, this leaves, or this, I suppose this allows the Fed to soften any poor data. So that would be employment numbers, right? Softer, right? Your non-farm payroll, your ADP, if your unemployment claims come in higher, if the unemployment rate comes in higher, and then of course your inflation data, which is going to be your CPI, your PPI, your PCE, all those inflation metrics, if they come in stickier, if they come in softer. The Fed has clearly pivoted the last couple months where it's not really about inflation anymore. It's more about employment. We did activate the SOM rule, showing that the 3-month trend is at least 0.5% higher than the 12-month low. That's what the SOM rule is. I know it's happened. It's been this undefeated indicator, but so too has been an inverted yield curve. Sometimes it takes 24 to 36 months for us to hit a recession. Their argument is that we've already had a recession. 2020 was a recession. 2021, 2022, we had 2 contracting GDP quarters. 2022 was kind of this transitory rolling recession with different sectors getting hit at different times. We obviously had a bear market in 2022 with the markets, dropping 25, 28%, 35, 38% respectively. That's S&P and the NASDAQ. So coming out of this, I mean, it's anybody's call. I mean, we have price peak to earnings in the S&P. We kick off earnings season, so we have this big gap between September 18th and November 7th, but we also have earnings plus employment plus inflation. And I think that the big takeaway is going to be good news equals good news, and bad news equals bad news. and we're going to see how really the data falls. And so I don't know if the market's going to run ahead of this. I think what the market just did over the last couple of months is once we found that bottom August 5th, found the bottom again like right after Labor Day, the market just kind of pushed and tried and just staying resilient, staying elevated. Um, but I think it's lacking the catalyst to get it higher. Now, is the Fed enough to get the market higher? Maybe. Maybe it is. Maybe tomorrow's enough to push it higher, and then everything else just falls in and it falls into place, and the data's good, and it keeps going higher. But I would still be trading with both eyes open, head on a swivel, and it sucks to have to buy insurance, but I do think it's necessary. It is look, if you want like tighter drawdowns, I think insurance is necessary. If you're just, in and out of the market with very little exposure outside of this is a trade that I'm taking and it's defined risk, then you don't have to worry about, kind of wasting money on hedges. But for me, I carry positions, I build positions. I've got trades that are anywhere between, today, this week, this month, this quarter, this year, next year. And so those longer term trades are way more affected with obviously the price swings. And I'm trying to make sure that those aren't as affected because I want to make sure that those are offset. So if I have drawdowns in those, I'm trying to offset those to the best of my ability with some hedges. And it sucks to have to pay for it, but I don't try to pay a lot for it. But I try to get some, 3 to 5 times profits, sometimes 8 to 10x profits. So when they pay out, they actually make a good dent and fix those drawdowns pretty quickly. Allow me to take some income, allow me to lower cost basis. So anyway, does this little summary make sense? So like I said, I've come a long way the last couple of weeks by just kind of being like, okay, if this is what the probability says, why would they do it? Why would the market price in 50 basis points? And my conclusion is that there's enough of a time lapse between September 18th, November 7th, that there's still a lot of data to come in. And if this data comes in softer, I think this allows the Fed to kind of get ahead of it and maybe soften the blow. Where if employment news continues to be bad, the Fed's like, look, you dummies, we already cut. That's why we started at 50 basis points. We're going to cut some more by the end of the year. So the Fed is trying to implement this bit of a backstop. It's certainly going to help, small caps and business refinancing and debt restructuring and long-term refinancing could change a lot. This could help the housing market. I'm in this boat with the housing market. I'm looking to close on a house in March or April, and I'm hoping that the Fed wants to cut all the rates that they want to cut by March of next year. So if I could get the rates by 100 basis points, 125 basis points, I'm going to be pretty happy. That would prevent me from having to buy down rates aggressively, and maybe I can close sub 5, and that's just naturally letting the prices fall where they are. Okay. So this is my outlook for, tomorrow. I know this doesn't really help with price. What I'm doing to trade for the S&P, I put this trade on this week. I have a vol play. My center price, let me see where my center price is on the SPY and the Qs. I did basically the same trade on 3 different assets. The SPY, my center price is around 562. I'll put that in here. Okay, so 562. And I need price to go up about $9.60 one way or the other. And then on the QQQ, I need price to go up $11.50. And this is actually not just for tomorrow or this week. This is out to October 4th. So I'm giving the market a couple of full weeks of trading for me to get those moves. And I think it's possible. I think the probability is fairly high that I can get, for a QQQ that's able to move $19 a week, I need it to move $11.50 in 2.5 weeks of trading. I think that's probability is fairly high. Even if it's noise, if price goes up enough or down enough, I should be able to grab some profit. My center price here is around 471.50. So we'll go 471.50 center price. So I'm trading that on SPY QQQ, and then I also did the same thing on NVIDIA. NVIDIA is down a little bit on the day. I centered my trade on NVIDIA. I think this is only a dollar spread. NVIDIA, I did a 116.50 as my center price. So 116.50 center. And for NVIDIA, I paid $8.45. Need price to move 8.45 or more. And those yellow boxes represent my profit zones. If price does get to one of those highs or lows, from 116.50 up to the highs around 130, that's about a $14 move, right? $14 move. and then 116.50 down to the lows around 100. That is a $16 move, give or take a few cents, right? So I could turn, an 8.45 debit into maybe a 12, 13, $14 credit. I'm giving myself a little bit more upside on both. I think I gave myself 17 on the upside and 20 on the downside. So I think if I could turn this into, 12.50 to 14.50 in profit, go after those, pretty repeatable numbers, a 25% take profit, 50% take profit, something along those lines. Let me catch some comments here. 50 basis points looking more likely. Yes, it is. Thanks, Ding. Been a futures trader for a long time, dipping into options. Any advice, books, courses? One thing I can help you with in my YouTube channel, you can check out my video series. I have like 4 options videos just called Options 101. That might just to get started. If you can get the concept of options, you can certainly apply that to futures options, which I certainly love to trade. Penny says, remember Bernanke's briefcase indicator. I don't know what that is. Bernanke, that dude was, you talk about a wild Fed share. Can you explain the ES head? Yep, I'll explain that one, sure. Does it make sense to let today's daily I'm already out of those trades. My daily profit play, I'm already out. I took 4 trades today on daily profit play, took 4 winners. I'm out, and I got out. And again, I'll say I'm fortunate because I got out prior to the drop that we saw on the SPX. So I was trading all morning. Here's a chart right here. I'll get rid of this workspace. Here's SPX for the morning. So I took 3 trades in the morning while we were live, and 2 of the 3 finished in profit, and the third one closed out shortly after. Between, I think it was around like 10:30 or something like that, and then I took another trade right in here between like 11:15 or so, and I got out in like 25 to 30 minutes. So from the opening bell around 9:40 a.m. to around 11:50 a.m., that 2 hours and change, I ended up grabbing 4 for 4 with the daily profit play. Now, depending on where your strikes are, if you're still in the daily profit play, I'm not sure where it is. If you saw this price drop and you're still in the trade, hopefully you're able to get a trade below and a trade above, and you're grabbing some extra profit. But if you were in with this area as your center price and we've dropped down, that lower side may be threatened where it's, you're kind of establishing a line in the sand for the day. I hope that's not the case, but we were out of the trade within the first couple of hours. Yeah, Doug says went 2 for 2 today. Good. Seemed like we had a lot of buying the rumor, 0.25, so expect to sell the news. I know, and it's easy to say that, but truthfully, I have no idea what's going to happen tomorrow. I'm not trying to be a hero. I'm not trying to call this is what price is going to do. I don't know. I've been in these markets for so long. I've seen days that the Fed is absolutely moving the market. I've seen days the Fed does absolutely nothing. I've seen the market move ahead of the Fed. I've seen the market move after the Fed. I've seen the market do nothing the day of and move the next day or after. It's like, it's all nuances, and what Powell says doesn't really matter. Price is going to move however it wants to move tomorrow. All I'm hoping for in the morning is things are relatively calm so we can grab some daily profit in the morning and be done. And then we'll get ready to, brew our popcorn and watch the craziness that happens and unfolds to the afternoon. I don't know. I don't know if there's going to be a ton of price action. I think it's really the wild surprise would be if the market's caught off guard. And I think at this point, the market's caught off guard with a 75 basis points cut or a 0 cut. If there's no cut, 25% might disappoint the market, to be honest. 25 basis points might disappoint the market. 50 basis points has been priced in by futures. That's the closest thing. This tool seems to be spot on most of the time. And we'll go with it, So we will see if this shifts by tomorrow, but before the news actually hits the headlines. But I have a feeling we're still going to see 50 basis points, and this allows the Fed to have that little cushion, be a little bit more dovish up front, allow the data to fall in through the month of October, and then we'll see if earnings season picks up with forward guidance that's positive, things looking better, more optimistic. Maybe all is well, right? Maybe the Fed can save the day and actually thread the needle and get this soft landing, and it's great. I still think volatility in September, when we start off in a rough patch with September, it's 0 for 10 anytime we started in the red to finish green. So that being said, this is the September start. That red candle we had on Tuesday right after Labor Day is the start of the month. So if we finish, anywhere below these highs, then it's still 11 for 11 with the market starting in red, staying in red. So I could see the market doing this, not necessarily going anywhere. I do wonder if we're going, higher lows and getting narrower, or if we're going lower highs and lower lows, something like this where the market actually does turn and try to retest August 5th lows. I don't know. Okay. All I'm doing is I'm willing to take some hedges that are pretty cost effective. So I'm doing like an MNQ hedge down here. I'm doing an MES hedge down here. I did put on a hedge today that I want to take a look at. We can do that right now at 326. We still have another, hour and a half to place the trade. It is probably trading a little bit cheaper than what I got into it for, but I'll show what the trades are. We can actually, consider the alignments of it right now. Let's see here. Took a third trade, exited with 18%. Good. So just over that 15%. Awesome. You only posted the official trade and bonus one. Omar, we talked about all trades that I posted today. So you saw me live this morning take 3 trades, and then I posted the other trade in my daily profit members channel. So at 11:38 a.m., I posted that other trade on the SPX. So we took our trades live this morning. That was at 9:52. Actually, I'm sorry, 9:41 a.m. took the trade. You saw me take 2 more accounts and 2 more trades, and then I posted that additional one at 11:38 for profit, and that was let's see, on my broker platform, SPX. That last trade that I posted, I got in 11:36, exited 11:59, so it took about 23 minutes for profit. Yep. But anyway, today was a good live session. If you're not in the daily profit play, certainly something worth checking out. I mean, we just logged. I'm trying to think since last week, this week after starting the service, I think we have, I don't know, 12 or 13 winners to 1 loser. Let me double check. When did this service officially started with students last week? We started on the 10th, and so we have how many trades? We have, is that 11 trades? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 10 trades. We have 9 winners, 1 loser. Not too bad to kick things off. So anyway, good stuff. All right, so let's talk ES. Okay, so this is ES. This is a futures feed for the S&P. I'll just go to the feed right here. I put on a 5,600 broken wing butterfly with call spread. It's a call spread. So first, let's talk about what exactly is a butterfly spread versus what is a broken wing butterfly spread, and how is this trade positioning for the market. Now, I put on a September 27th, 9/27 expiration, and the reason why is I don't know if the Fed's actually going to create any type of big movement this week. If it does, great. If it doesn't, so be it. But if the market is going to go adversely, I want to see if we can actually get back down towards these September lows right here. And so the way that this trade sets up, okay, we have till 5 o'clock. I just usually, I don't like to place trades up till 5 o'clock. We're fine. We have plenty of time to get through a futures trade. Yes, but like I said, I think it's going to be trading a little bit cheaper on the credit side than what I got in for. I got filled at 375 and 350 on the credit side, so 3.75 credit and 3.50 credit, depending on what account I filled on. And so my credit itself, 3.50 times 50, I'm looking at a tail credit of around $175 for a max risk of around $65. All right. So the way this trade works is here's the difference between a broken wing and a normal butterfly spread. All right. So if we see price go lower, okay, so let's say that this is real price. This is real price. So if this is real price and price goes lower, what I have in my broken wing is right here. I have a risk in the trade this way, okay, and then I have a profit trap and then credit. So to label this, what this means is this would be my tail credit, okay, this is my profit trap, and this is my risk. So it's risk right now, but if price is going to move its way lower, so if real price moves its way lower, and gets into my profit trap, there's a window for me to get paid roughly, it's about 9-to-1 net profit. And over here, it's about 3-to-1 profit because I'm going in the money, right? So what that means is because price is at 56.92 and I'm doing a 5600 sell, I'm doing a sell, like a sell call at 5600, that's in the money, which the broker gives me more premium for being in the money, right? And I'm using ES because I want it to be a cash settled instrument. There's no assignment here. And so the risk is if price just stays where it is or price goes higher, I will lose right here, right? And I'll lose about $65 a contract. If I win, I have potentially $650 a contract or about $175 a contract if I win. So I'll take those payouts, right? I mean, that's a nice little asymmetric trade, roughly a 10-to-1, roughly a 3-to-1. So yeah, if price drops, it's a nice little hedge to be profitable. If price goes up, I look at it like the rest of my portfolio benefits from higher highs. So that's why I'm willing to say, look, it sucks if I lose, but that's a really small loss for the entire portfolio to essentially be fine and protected. All right. So I will give you the trade. Okay, I'll give you the trade. This is ES. And again, if you can trade futures, this is one way to look at it. So I went out to the 27th, which is not this Friday, but next Friday. And I sold the 56.10. So here are the trade, or here are the legs of the trade. So I did they're all calls. So I sell 2 contracts at the 56.10. Okay, and then I buy one at 5600. And then I buy one at 5625. All right. So if I show you this trade, so these are let me add this in. So these are all calls. Okay. And right now, let's see what this is trading for. So if I do similar trade, oops, not opposite. Let's go similar. Right now, you could still get filled. So the spread's a little bit wider. So this is bid at 225, mid at 350 to 360, ask at 475. I would not take the trade for less than like 350 credit going into and I try to get it filled today to give it volatility for tomorrow. Anyway, so if it's 350 credit or better, that's still pretty good. 360, 375, that's better. But the overall like broken wing butterfly is pretty tight. The reason I like the trade is I'm giving myself an opportunity that if price goes, so if price falls, let me use a different color here. If price falls lower, then let's say this is live price. If price falls lower, that gives me a chance to get into my profit trap and get my tail credit, and my risk would be here. So I'm taking risk up front, and I do need price to fall. I mean, there's no getting around it. Like I'm taking risk in the trade because I am trading it way below current price, and so I need price to fall. But because I'm doing that, the broker is giving me more credit up front to then have my profit trap and my actual, this would be my tail credit here. So the credit that I take on the trade. So that way, if price falls a long ways, I still make this profit over here. Okay. If price falls perfectly into my trap by expiration, then I turn this into a monster win. Now, I don't expect this to be the win, right? This is the bonus. This is the best bonus. If we can nail a pin price, that's one of the best feelings in trading where it's like, yeah, I just made a 9-to-1. Does it happen very often? No, maybe 10% of the time. But if we have price fall a decent amount, I need price to go beyond. And if price goes beyond and it gets below 5,600, then I can grab that $3.75 credit and I can keep that up front. So I can keep that $175 per contract. Okay. So I'm going out to 927. I'm given this week the chance to be volatile. I think it will be. That's fine. I'm hoping that price wants to fall a little bit. If it does, great. We can come back in and kind of retest this September sell-off that we had early after Labor Day. If price goes higher, I'll eat the hedge, chalk it up as, just didn't work out. But the benefit is my portfolio continues to go up. And that's not a bad thing. But if we go to the downside, I want to take these stabs and generate a couple $1,000s, help soften the blow with any type of drawdowns that we might see. All right. Okay. So that is the trade right there. It's still trading for like 350 to 360. I think that credit's available if you're willing to take the trade. This is what it looks like in my broker platform. So 1, 2, 3, go to analysis. And if you can see, let me see if I can zoom. Well, all right, here I'll show you. So this is real price. Right now, this is live price right there. And this is my risk. All of this in red is my risk. Because if price doesn't go down, right? If price doesn't go down, I'm risking that $62. Okay. Now my profit trap, you can see the max profit here at $687.50. So that's roughly a 10 to 1. And then my tail credit is on the other side of this. So if price falls enough, goes through and over my profit trap, I can still walk away with the credit that I put on the trade with. And so that's going to give me the 375 plus the multiplier. It's going to be like 175 bucks. So it's still, 2.5, 3 to 1 if it goes all the way down, and it's potentially a, 9 to 1 if I somehow, nail this thing in the profit trap towards expiration. So the trick of the trade is I probably have to wait. If I want a good payout here, I have to wait until expiration to see this thing really give me the, the 5 to 1, 6 to 1, 7 to 1, 8 to 1 opportunity. The day of expiration, if we're way below that and we come ripping back in, maybe I get lucky with a profit trap. Overall, though, it's just a very small hedge. It's a low delta trade. It's essentially a low risk, high reward trade with a, somewhat of a low probability. I've got a 32% chance of profit right now. Call it what it is. If I can win 3 out of 10 trades with a 3 to 1 or a 5 to 1 or a 9 to 1 payoff, there's still a great strategy to make some income. So pick your battles. And by the way, when I did this trade, this is completely based on the expected move out to the 27th. So I think I've got this in everyone's account. So I'll try to look at the trade from scratch. Let me go to the table here. Let me just build this like I do another week out. I'll go to the 30th, which is Monday. So if I do can everybody see this shaded red on Tasty? This is a Tasty platform. So on the upside of price 58.10, on the downside 55.75 to 55.70, right? So if I did a long call butterfly and I move this down towards the expected move, I'm actually up a little bit further. There's my 56 and there's my 55.90. So if I took this trade out another week to September 30th to end of the quarter, I could do the same type of trade here. There's a little bit more risk on the trade because my legs are slightly wider. This is a $10 wide and this is a $20 wide. And so my max loss is $125 per contract, but my profit trap is $850 and my credit up front is, let's say, $7. $7 times 50 is a $350 tail credit. So again, it's like, 3 to 1 on the tail credit. It's a 6 to 1, 7 to 1 on the profit trap. It's only tying up about $200 in buying power. So for a couple of hedges, that's not a bad play. And outside those expected move to end the quarter, I am curious. I'm just really curious where we get to in the end of September, right? I don't know. Part of me thinks I might just take that trade too. It's cost effective. It's a decent amount of credit. I'm risking about $125. I don't mind that trade. So I think I'm going to take that trade as well. So it's really the same trade. It's just 10 and 20 wide in the broken wing. If I can get the spread again is pretty wide. Bid is $5.50. Ask is $9. Mids around $7 to $7.15. As long as I'm risking less than like $150, I think I'm pretty happy with that trade. Let me see if I can get. Let's see what $7.50 can get me. So $7.50, I can get $3.75 in the tail credit. Max profit in the trap at $8.75. Buying power, max loss of $1.25, so $125. $7.50. Let me see if I can finesse this down and see what price I can get filled at. I'm happy at $7.50. I think I'm willing to accept about $7.25. If it's under $7, I probably won't take the trade. But let's find out. So I'm going to go here. Let's try $7.50. And that did not fill. Not a surprise. So $7.50, that's the mid price right now, but let me try to finesse this down by about 10 cents. So here's a $7.40. Okay, I'm willing to take $7.25. If not, if we come into like a little bit more of a liquid window tomorrow, I can take this trade tomorrow in the morning, like before we come into the Fed decision. $7.30 perhaps. Filled at 7:30. Okay, so I'm going to take this trade right here. Let's go into everyone's account. Working. Come on, man. So 737. All right, 725 is as low as I'm going to go. Filled at 725. Okay, let's see if we can get 725 across the board. No problem there. Okay, a couple more accounts. All right, that just got filled. So I'm going to add that in. This is out to the end of the quarter, September 30th. And let me get this one in. So I'm doing a ES. This is the 9:30 expiration. I'm doing a -2 at 5,600, +1 at 5,590, +1 at 5,620, 7.25 to 7.50 credit. Okay. And the mechanics of the trade, I'm risking about $130, $135. And I'm going after about $375. Let me see what this looks like again. So I'm risking 137. And I have an 862 max profit. So that's my profit trap. And I'm looking at the tail credit 725 times 50, 7.25 times 50. I'm looking at 362.50 tail credit. Okay. So that is the trade that I just added. So if you're interested in this one, this is just took a 9:30 expiration trade on /ES. And I'm going to add that into my Discord here for, this is going to be under futures trades. So let me put in trade positions. And this one is, let me go just to one account here. Should be a little bit easier. ES for the 30th. 1. All right, let me check something here. Trade. This is a bear put spread for the 30th expiration. This one is the 56. I need to find those legs. So let me go September 30th. That one. All right. 5,600 there. 5,590 there. 5,620 there. Analysis. There it is. See if I can make this a little bit smaller. There we go. Okay. So get a screenshot of this. And those are the parameters on the downside. So you can see max profit, max loss, buying power. It's a delta neutral trade. Vega's pretty low. These are all like good Greeks to have. And I'm trying to generate hopefully, 300 and some bucks of profit. So I'll put in here. This is live price. And if ES falls below 5,600, looking good for 3-to-1 and up to 9-to-1 profit. There we go. Okay. So that trade is in. Cool beans. All right, so that's ES. Also, the rest of my day, I spent some time. Do you have any non-futures index trades you can recommend? Well, the ones that I did earlier, I mean, I'm in basically with vol plays on the SPY, the QQQ, NVDA. I did those trades, which basically looks something like this. If the SPY goes up or down by October 4th, that's all I'm really looking for. So if price goes up or goes down by October 4th, I need price from around a 562 center, which is current price. I need price to go up about 10 bucks higher, 10 bucks lower, and then I start generating some profit. So it's pretty simple. Obviously, I need some volatility, but I'm trading the vol through this week's FOMC, through however the market's going to try to wrap up and maybe finish up the quarter. We also have triple witching this week with stock expirations, stock index expirations, and stocks index futures expirations all coming on Friday the 20th. And then, of course, we end the month on the 30th, kick off a new month with fresh employment data coming out on October. I think it's the 2nd and 4th, something like that for October, because Monday's the 30th, final day of September. And then the 2nd is going to be Wednesday for ADP non-farm. And then Friday non-farm is October 4th. So if the market moves, SPY play, it's a non-futures trade, just ETFs, trading some volatility there. And then Qs, trading some volatility there. And then NVIDIA, trading some volatility there. I'm looking for price to go up or down. I needed to cover the debit that I paid. So I paid $8.45 in those trades, or $8.45 for NVIDIA, 9 and change on SPY, $11.50 on the Qs, but all those have the ability to move. I mean, NVIDIA can move $16 in a week. The Qs can move $20 in a week. The S&P can move $14 to $15 in a week. So there should be enough to hopefully cover my cost and get me a couple bucks profit for those percentages that I'm looking for. Okay. This can be structured for XSP for those who don't have futures. Yes, it can be XSP as well. That's like trading the mini SPX. XSP is fine. It is a little bit less liquid, but it's a fraction of the cost of XSP. Yes, or SPX. So if you did the same type of thing here, I'll show you XSP right here. So XSP going to trade. If we did the same thing out to the 27th or the 30th. Okay, you have single digit strikes. It trades a lot like the SPY. Okay, so let me see here if I did a call butterfly and put this up near the expected move. So if I had an expected move around 552, I do a broken wing. This is a pretty straightforward trade. This is essentially the same mechanics that I just took. I put it towards the end of the expected move on the downside. So I'm going in the money on the call fly. I'm collecting about 75 cents. My risk on the trade is $22, about $22. If I collect 80, I mean, think about this. If I collect 80 cents, okay, if I collect 80 cents on the trade, I'm risking about 20 bucks to make, hopefully, I'm trying to think, I'm risking 80 cents to make, I'll make about $80 credit if I'm right, and price goes way below 551. I have a potential profit trap of $177 if it is perfectly pinned at expiration at 552. Probability of that is really low. You can see here's a 29% probability. If I move this all down a strike, 75 cents, you're just through the expected move. That's not too bad. The only drawback with this trade is you need price to move down in order for this trade to get into that profit, right? So price needs to fall, needs to get into your profit trap, and possibly, let me do this again. If price falls, there's profit trap potential, and then there's the tail credit. So this is your risk. So the whole trade from right now is actually in risk, but it's small because you're going in the money. So it's small risk. If price falls, you have a chance for trap profit right at the expiration at your pin price, or you have the excess move outside of this for it would be roughly 80 cents credit or so. But you can see that the bid mid ask is quite wide for XSP, and part of that's because it's also 3:50 in the afternoon. So this is a little bit less liquid than if I was trading the SPX or trading the SPY. But it is something that's very cost effective. Yep, very cost effective. Cool. Okay. The rest of my day, I just spent going through the portfolio. I put together a to-do list. Let me see here. My to-do list. So I have OXY. I took some assignment on OXY. I still have a long put at 57.50. I'm willing to own the shares, but I'm looking to see if this turns and goes further south, then I'm looking to own the shares as cheap as possible. What I'll probably end up doing by October is if this comes back up towards $57.50 to $58, I will probably just keep the assignment, take the $57.50, close out for small credit, and then just repair this with a wheel strategy and add some cover calls and try to repair it for maybe 50 cents to a dollar. If it drops lower, I'm going to keep the trade as is with my assignment at 60, my 57.50 long put that I can hedge to the downside, and then take the assignment into this ownership spot. I'd say between $43 and $40, I'm willing to say I would be a happy owner of OXY. So this is one that's on my to-do list and my radar through the middle of October. SPY and Q and NVIDIA, I talked about those are volatility plays out to October 4th. I put in the broke wing butterfly and ES. I've got two of them now, so 927 and 930. I also put some hedges in with MNQ and MES. Those are micro futures plays. MO, this is one of my better performing assets this year. I've got it covered at 52.50, which is kind of nice now because 52.50 is now out of the money. And so I don't run the risk of paying the dividend at expiration, which a lot of my cover calls are out to January. But I'm still monitoring this price very closely. This is a dividend play that for me, I'll continue to watch. We may see a pullback in this one, and that's totally fine. I'll just keep collecting about $1,000 a quarter, which is what I like, and that's why I got into it in the first place. The fact that this stock, when I bought it at $39, has ripped up here $16 a share was way more than I expected. I really thought we were just going to stay, chop suey, chop suey, chop suey, trade some collars, maybe do some strangles, lower the cost basis. But price obviously shot up to the upside in a big way. So I'm just going to hang out on it. I think if this comes all the way back down to where it started, that's not fun, but that's okay because ultimately every quarter I'm lowering my cost basis by about 94 cents. So every quarter, there's $940 getting paid into these accounts. And so you do that times four, 94 cents each times 1,000. That adds up pretty nicely just to have a little bit of dividend income. But obviously, it's nice to have the combination of dividends plus stock price appreciation. But this is a pretty decent pullback, and I'm looking to see, can we get to 55? Can we get to $60? And if I get it called away there, that's okay. I mean, my break even's in the low 40s or high 30s. So anyway, that's on my to-do list to kind of watch and monitor those levels to make sure that if it's going to get called away, I want to try to get it called away as high as possible. Next up, Pfizer. This one might actually get called away this week. I have a 29.50, I believe a 29.50. Double check right here. So Pfizer positions. Pfizer is currently up around $18,400. If it gets called away this week, it's because price would stay above 29.50. So I could look at another roll. In fact, let me do that right now and see, is it worth it? Pfizer's not known for high premiums or anything like that, but if I did a roll at 29.50, let me see if I went out another week or two. Because I have 10 contracts in this, I guess I don't need to be too cute because there is an expiration on this one. Overall, if I can grab $2,600 profit on 8 accounts, that's fine, and I don't need to be super cute because it is an expiration that goes out to January. I personally have the shares that I own, and I've been owning a little bit more longer term with some dividends. But as far as my call option, I bought the 25. I'm selling the 29.50. I've lowered my cost basis now to like $2. And so I get it called away for like 2 and change at 1,000 contracts or 1,000 shares. That's pretty decent just for a couple bucks. And let me see if I can. I'm just looking at a roll really quickly to see what this looks like. So if I roll it out by another week, I get another 16 to 20 cents. So that'd be another $160 to $200. If we stay where we are, that'd be okay. That might be worth it. Maybe one more week. I can revisit this one tomorrow. I only have 5 minutes, so I'll revisit this one tomorrow. But is it worth it for an extra $160 to $200? Yeah, I think so. For a price that might be, if we stay here and maybe push up towards $30, then it gets called away and there's a little bit of extra premium on top of that. Maybe I can grab an extra 10, 15 cents. So, and then FXI is the other one. This one's out to the end of the quarter, I believe. FXI is in here somewhere. There. I own some shares, and they're all covered calls at 27. So this one, if it's not getting called away at 27, I'm just going to continue to repair it. I've lowered the cost basis a decent amount. Let me see what my cost basis is on FXI. FXI, cost basis, Let's see here. The diagonal is over and done with. Got a naked put. Here we go. My cost basis is 24.38, trying to get it called away at 27. So if it doesn't get called away, I'll throw in another $27 call, sell it against the shares. I'm just going to continue to look to repair this. It's not big money. It might be, a couple $1,000, but I'm just going to keep an eye on it. So that's part of my to-dos for this week, in addition to obviously everything that happens with the Fed. So Anthony, I remember you. I remember you coming to my house in Plantation. I remember you, dude. Jim says took the ES Butterfly. Jim says about MO several years ago at 2050. Holy shnikes. That's a pretty sweet trade. 2050 plus dividends. Good stuff. Great stuff. Yeah. Man, where'd you find that price? 2050. It was this. Did you have it before? Because it used to be MO was always the ticker, but it used to be Philip Morris. Then they split, and Altria is like some big parent company or whatever. But it's still the same old thing. Maybe their best thing right now is selling little nicotine pouches like Zyn, or the what is it, the vape stuff. It got them into a lot of trouble. That's probably where a lot of this decline came from. Highs at 78 all the way down to the lows at 32. But they're still a dividend machine. They still have its. You could argue it's a staple. Another one that I actually want to trade is BTI. This is British American Tobacco Industries. This thing has ripped off these lows, and dadgummit, I was in this thing at like $30 with ownership. Son of a bee. So I bought shares at $30 and I closed out at 35 with limit order. It's up a little bit higher, but same type of thing. This has a pretty solid dividend, 7.5%. But I missed the trade, and this isn't great to just buy. The credits are terrible if I'm looking to do like aggressive options on it. I should have just held that position. This was back to the COVID lows. I should have just bought old BTI, but I did buy it at 30, got out at like 34 and change. It is what it is. If we get a pullback, maybe I'll keep an eye on it for a re-entry around like 34. Let me see what I have here on BTI for fair market value. So British American Tobacco, high level of debt, dividend not well covered by earnings, forecast to grow, trading estimated fair value well below. We're trading at 2.5x price to sales, negative PE ratio, and we're looking at a fair value around $67 UK. So, oh man, US dollars, that puts this way higher as an ADR. I think I want to buy some BTI. Let me see if I can get a pullback here. Man, I might be asking for a lot. Let me check something. I might just do some puts on it. So if I go out on BTI to January, can I get anything? Am I willing to own it? Sure. I'm willing to own it at 35, 33, and 30. If I have assignment on any of these numbers, I would own the shares at $33. I potentially have the cost basis would be interesting. I basically have a $100 assignment. Let me do the numbers here. So let me use a notepad. So if I had 100 shares at 35, and that would be minus $1.25. I'm just going to do my break even. If I want to throw in some puts right here and say, look, just come back to me. If not, I can generate some income. It'd be like $300 of profit with no assignment. But if I can get some assignment, I wouldn't mind taking some shares of it. 100 shares. Dang it, it's closing bell. I can do this one tomorrow at $33 for 90 cents. And 100 shares at $30 for 40 cents. So that would give me 33.75 ownership. That would give me 32.10 ownership. And that would give me 29.60 ownership. So if I took on 300 shares, 33.75 plus 32.10 plus 29.60 divided by 3, I'd have a break even of 31.81. 31.81. So if that is the case, and I could own this at 31.81, what would be that discount? If we came back down to 31.81, I would own this stock around 15 to 16% cheaper than right now if I was assigned on anything. I'm going to take that trade tomorrow. So this is more of it's a dividend play. It's a bit of a buy and hold. It's a defensive. It's a consumer staple. Look, when times are tough, people are going to drink. People are going to smoke. I'm here to make some money. I'm not here to be ESG. So anyway, I like the trade. So I want to place that one tomorrow. I've got it typed out here in my notepad. So I'll add that in tomorrow morning. And I think that's a pretty good trade. It's similar to MO, but MO has ripped up a lot. I mean, percentage wise, we're off these lows. We're up about 40%. Wow. And we pulled back about 34%. You go to MO, and this one from the lows to the high, we were up about 40%, pulled back again. Eerily similar actually with how much movement that gave us. There was also a recent dividend. I probably just missed out on that one for BTI. I'm assuming I missed out on the dividend. Nope. If I get in tomorrow, I actually get that 73 cents dividend. Not too bad. Not too bad. Okay, cool. So a couple $100 of income if I don't get assigned. And if I do get assigned, I'll take it, own the shares where I want. 31.81 wouldn't be a bad break even. And then I'll sit in this trade and collect a nice little 7% dividend and see if I can target this thing up towards like 50 to 60 bucks profit or per share and go from there. All right. Any final questions for the final hour? Otherwise, we'll wrap it up. So tomorrow's schedule, just in case you're curious, 9 a.m. Eastern time. So here's Wednesday's schedule. So 9 a.m. Eastern time, I will be doing my daily profit play live for members. I will not be joining A1 Trading in the morning, but I will be joining them at 1 p.m. Eastern time. So this should be an FOMC live session with A1 Trading, going through the FOMC announcement. I want to say it's tomorrow. Let me double check that here. Let's see what my man James gave me. Tomorrow, 1 p.m. Yep. So to 1 p.m. tomorrow to kind of prep, get ready. The FOMC announcement is hitting the headlines at 2 p.m. But I'll be live for that session. And then we'll be live tomorrow for the final hour. And that will do it. So my to-dos in the morning, we're going to get into daily profit play. Take that trade. I'm going to add BTI to the mix tomorrow. For my trades, I'm going to do a 30. Where's my notepad here? I'm doing a 33 or 35. It's a 35 by 33 by 30 sell put. So these are cash secured and I'm willing to own. So one, it's an income play for 2.80 to let's say $3 of income. Two, if assigned, ownership with dividends. I can also use options against the core position to lower costs. And that's what I'm going to do on BTI tomorrow. And then I've got some other things for this Friday with expirations. Got the ES hedges, got the MES, got the MNQ, and tomorrow's a brand new day. All right, any other questions? Otherwise, I'll let you go. Thanks for being here. Yeah, those trades are going to be through. I've got a trade alert service through A1 Trading. So tomorrow afternoon, if you want to join, there's a way to see that link. It's also in my Discord. I've got a lot of stuff in my Discord channel, so I try to keep it all easy to find. So my Discord channel, this is the free group chat. Anybody wants to talk Forex, stocks, options, futures, my daily blog, any analysis and videos that I post on TradingView and push them out on my respective social platforms. I do a lot of private coaching and stuff on the weekends or evenings. All of my education is here. So you're asking about those signals and trades. They can be found right here. I've got this Pulver alerts and signal service. That's a direct link to that. And then my daily profit play is right here. My $100 challenge daily profit play. I'm going live every single day for that. So there's a direct link. You can check it out. There's also if you want to see the webinar around this, you can watch the webinar. If you want to jump right in and dive into a live session with me, it's a combination of teaching, trading, and then on Friday this week at 4 p.m. we have a masterclass to go through the entire strategy again in full. So that is really the best place to find all my stuff, in my Discord. Cool. So if you're not in my Discord right now, you are welcome to join. It's free for everybody. Let me invite, and I'll throw this link out there. So this is my Discord channel. Okay. And then also I have a free Telegram if you would like to join. Let me find that link right here. And I'll post that in the chat as well. Okay. So you can join both. You can join the Telegram. You can join the Discord. Just another way to find me with hopefully what is pretty instant, pretty real time alerts, and stay up to speed with what's going on. Cool beans. All right. Yep, and anything that I'm doing here on YouTube, anything I'm doing on Twitter, anything I'm doing on Facebook, the reason I like to push out through this platform, it's called Restream, is when I do this live, everything is archived in those social platforms. So when this is done, it's automatically playable on YouTube, and you can join it, halfway through. You can start at the beginning. You can join it live. You can watch it after the fact. So it's all right there on the big bad web, YouTube, and those social platforms. Good stuff. All right. Sweet. All right, everybody. That's closing bell. Tomorrow we got a crazy day ahead. I'll see you tomorrow with Daily Profit in the morning. We got FOMC. We'll see how it's all running. Actually, tomorrow's final hour is going to be interesting because we'll be right in the heat of things for Powell's press conference is likely going to wrap up. We'll be trading the final hour. Obviously I'm going to be watching. I'll probably be watching. I don't really have a ton of expirations for tomorrow. If I do, they're going to be 0 DTE on the Daily Profit play. That's about it. But I'm out of those trades in the morning, and we get in, get out, and then we're just ready to just kind of sit back and watch how things fall into place. We limit that exposure. The market can go crazy. It can do absolutely nothing. I don't really care. I just want to make some money tomorrow, and then we'll talk about it. Okie dokie. All right, cool. Have a good rest of the day.